All right, good morning. I want to welcome you all All right, so sorry, I didn't know my mic was muted. So we are going to start off our analysis. Once again, you're welcome to this analysis. Like I said earlier, my name is Don Dio. I'll be your analyst for today. We'll start off our analysis by looking at the fundamentals as usual. After the fundamental analysis, I'll look at technical. Okay, so we'll be using forexfactory.com. So I'll share my screen now so that you can see what. Now you will notice that on forexfactory.com, we have no much activity related for today. So I want to believe you can see my screen. First of all, if you can hear me clearly, please just send me a message. Type a yes. If my audio is clear and you can hear me from your end, please type a yes. Can you hear me clearly? Please, if you can hear me clearly and my audio is clear on your end, please type a yes using the chat. Right? Okay, so that means my audio is okay. That's good. Thank you, Chinedu. That's good. So my audio is okay. All right, so let's proceed then. So like I said, we are going to start off by looking at the fundamental analysis. Then afterward, we'll switch over to technical analysis. All right, thank you, Mr. Lukman. So we'll be looking at the forexfactory.com. Now, if you look at that calendar, you notice we do not have much slated for today. On forexfactory.com, we only have just a few news on the United States dollar. I see here, that's by 3 p.m. So we have the news on the dollar by 3 p.m. And that news is new home sale. New home sale. Now, on forexfactory, it's not shown as a high impact event. But if we look at another calendar, so I'll take you to another calendar, which is the calendar I personally use in my own analysis. So I use forexfactory, but not often. The calendar I use most often in my analysis. This calendar is my FS book. So if you look at my FS book, you notice that for today being Wednesday, we have the news on new home sales. And for this particular calendar, it is shown as high impact. So you can see new home sales month on month. I want to believe you can see my cursor. New home sales month on month. So it's shown as high. And then we have the second one also shown as high. So the news we are seeing on forexfactory on the dollar, which is shown as medium, just put it at the back of your mind that you can see movement in the market, because in some other quarters, other calendars, that news is actually high. And there are reasons to believe that this news will also have effects in the market. So even though on forexfactory is shown as medium, on my FS book, which is my preferred calendar, showing it as high impact. Now, earlier this morning, we had a news on AUD, Australian dollar, that is CPI for the Australian dollar. And the news actually turned out to be negative for the Australian dollar. So what that simply means is that the CPI on the Australian dollar declined. There was a decline in the CPI for the Australian dollar. So look at it up here. I want to believe you can see it. So it's showing monthly CPI, high impact, previous was 3.5, consensus is 2.8, and the actual is 2.7. So that's a massive decline from the previous. You can see the massive decline. Now, when CPI declines like this, it means that the inflation rate is gradually coming down. So one would expect the Australian dollar to start losing strength. But we may not see the drastic reduction, the drastic decline in Australian dollar, because yesterday, there was announcement of their interest rates. So the RBA, which is the Reserve Bank of Australia, they kept their interest rate unchanged. So it was it's 4.5 and it stays at 4.25. So with that being said, interest rate is still as it is. That was just announced on Tuesday. And today, Wednesday, we had CPI. We may not see so much effect negatively on the Australian dollar because the interest rate has not been cut. And in addition to that, the RBA have said they would want to see further decline in the CPI. So just this one single decline in CPI will not be enough to start causing us to start resulting in weakness for the AUD. So we still expect the AUD to be on the upper side, and that's because the market is currently in a risk-on mode. So take note that whenever the market is in a risk-on mode, Australian dollar tends to benefit from that. Australian dollar and the New Zealand dollar and the CHF benefits whenever the market is in a risk-on mode. And that is exactly what we are currently seeing, markets in a risk-on mode. So the decline in the CPI for AUD will not translate to weakness immediately. Weakness might begin to come in when we have a second reading of the CPI and it turns out to be less than the previous. That is when we start experiencing weak decline in AUD. So besides this, the other major news we have for today is on the dollar, which is new home sale. And that's going to be by around 3 p.m. So have it at the back of your mind that this news has the potential to cause volatility in the markets. Even though on Forex Factory, it is shown as medium impact, but it has the potential to cause volatility in the markets. So that being said, nothing much. So we cannot go to the other days. We have news on Thursday and on Friday. We can't go to that day because my job is to take care of the activities or the events for today. So let's now move over to our chart and see some of the instruments that present us with the opportunities for good trades. Okay. So the first analysis I will be doing will be on the dollar index. So we'll be looking at the dollar index, and then after that, I will take your comments. I will take your currency pairs. If you have any instruments you want us to look at, then we will do that immediately. So let me share my screen so that we can look at the index together. Now, this is the dollar index. Now, I usually start analysis by looking at the dollar index, and that is because dollar index shows us the overall movement on the dollar. So you can see I have this marking on my chart on the dollar index. It's marked on my chart. This mark was the analysis we did last week, Wednesday, during the CPI, where I forecast that the dollar index will run down to this area that is in green, then most likely push back up. I also remember vividly, I mentioned that for me to be considering a buy on the dollar, I would want to see the market break down into this region. That is when I expect to start seeing bullishness into the dollar. Now, it may not be long term, but we hope to see markets retrace a little from this particular region. And so we are almost at that point. If you look closely, you notice that we are almost at that point. So, but everything being equal, I'm still expecting weakness in the dollar. this is where we are. We've been trending down for a long period of time. Throughout last month, up to this month, we've been trending down. We are likely to still continue going down. And but like I said, I would want to see a mild retracement from that region. So once we experience a retracement from that point, then there's a tendency for us to go up. So we are almost at the support, which is this red green area. And also note that we've exceeded the low price from last month. So this region you are seeing here, that's the lowest price recorded from last month, this point. So we've exceeded that, and there's a tendency we might still continue lower. The lack of major news, significant news events this week, we may not see so much move on the dollar. One of the things you must take note of is after the rate cut. Remember, there was a rate cut. The rate cut brought down the interest rate of the dollar from 5.25 5. And for those of us that attended that was online on Wednesday with me, I mentioned it vividly that we are expecting a 5% cut, even though the focus is showing us 25%. That is 0.5 basis points. But that there's a tendency it might go down by 5. And it actually happened, it was 5 instead of 2.5. I mean, 25% as announced. So with that being said, once the interest rate is cut, now attention usually shifts, because right now we now know that there's going to be continuation in that cut. It's estimated that by the end of the day, we should have 100 and I think about 100 basis point cut, which means they started with 50. The next could be 25 and then another 25. So we have 50, 25, 25. That's what we want to expect, or that is what we should see. So with this being said, the next focus will now be shifted to the health of the economy. So the health of the economy means looking at, focus will now be shifted from interest rates, because it's almost certain now that there's going to be 2 more rate cuts. Now be looking at how the economy is responding to that rate cut. 50 basis point was taken off, was applied. Now, how is the economy responding? So, news like your PPI, news like your PMI and GDP and some other news that shows us the health of the economy will now be what to see the reaction of the economy to rate cuts. The dollar, I'm still anticipating. Now, remember, this green shaded area is my support, where I am hoping for a retracement. But I want to see the market dip in, move into this area before we see a mild retracement. But that may not be happening this week, because the month is ending. Usually at the end of the month, the last week of the month, there's usually no much activity. So you rarely see much, because market is already, it has done enough for the month. So only going to be preparing for 2 months. So for this week, we may not see so much activity. But we may not even see much move market until next week. So that is it on the dollar. I'm still expecting weakness in the dollar, but short term, I would like to see a replacement or a small strength coming to the dollar. So at the current level where we are, the dollar index, I would want to see the dollar kind of give us a mild retracement. That's exactly what I'm looking for. Dollar gives us a mild retracement. What I mean by mild retracement is this. See the dollar all the way up to around here using this week. Then from next month, we start our movement back down. So this is what I'm the dollar. Now, why am I ending here? If you draw your fib from the highest price so far for this month to the lowest price so far, which is the price we are currently in, you will notice that this part is our 61.8% of the Fibonacci. So that's exactly where I'm anticipating that we might see a retracement to before a continuation to the downside. So I would like to see the dollar retrace all the way up to this region before we continue down. That means that for currency that are paired with the United States dollar, we should start experiencing some level of retracement on those instruments. Something like a Euro USD experience a movement to the downside. Now, this is short term, not long term. But the short term, I will expect this to happen. So let me go to the comments. So what currencies would you like us to look at? We'll drop the currencies you would like us to do some analysis on. Then let's look at it closely and then see what we have technically. If there's any instruments you want us to analyze, please drop your comments. So this person is saying, I have a losing sell trade on gold. Please, how do I partially close it? Please advise me as gold is dominantly bullish. All right, so ladies and gentlemen, gold. So I'm seeing gold. So please listen to me very carefully. Listen to me very carefully. You have to be very careful when you're trading gold. Now, the current position of gold is tempting to sell. Very, very tempting to sell. Let me ask you this. Let me ask. The prices of goods in your area where you are staying, what have you observed about prices of commodities generally in your area? Please just give me a comment. Just type high or low. The prices of goods generally where you are is increasing. Just type high prices. If it's low, type low prices. The prices of goods in your area, the things you normally buy, are they increasing or decreasing? Fine. So some persons are, yes, they are increasing. Now, this is not just peculiar to Nigeria. Virtually every citizen of the world is experiencing increase in price. Prices are increasing generally. So commodities that we normally would get at a cheaper price is on the rise, is increasing. And that is why we notice how expensive things have been. Now, if our local commodity, the things we buy, is always on the increase, what do you think in this current economic hardship, not just in Nigeria, this problem we are facing in Nigeria is not peculiar to Nigeria. Other countries are also experiencing inflation. Now, what do you think will happen to the price of a metal that's tagged a precious metal like gold? What do you think will happen to the price? In a global situation where prices of virtually everything is on the increase, what do you think will happen to the price of a precious metal like gold? So for a precious metal like gold, prices will increase. This will be on the high side. This increase in price, thank you, is not just peculiar to Nigeria. Gold is a precious metal. And if we are experiencing inflation in the world, there is a high tendency that the price of gold will be. If you were to buy gold, let's say you had the resources to buy gold physically, you do not expect the gold price of gold to be going down in an economy where things are increasing. You understand? So the world at large, prices of things are increasing. So you don't expect that the prices of gold will now begin to decrease. So that in itself lets you know that when you are trading gold, until there is a strong change globally, before you can now begin to say gold can decrease. But for now, you do not expect gold declining in a global economy and in an economy where things are on the rise. So the current direction or the current position of gold tells you that there's never been this much inflation on a global scale in the history of man. The prices of goods and things have never gotten this high in the history of mankind, because if you look at the current direction gold has reached, that's the highest in its entire history. The highest price gold has gotten in the entire history since the inception. Right, sorry about that break. My network was disconnected. I got disconnected by network about that. All right, so I was talking about the increase in prices of gold, that you should not expect the price of gold to decline as you are anticipating. If we have inflation on a global scale, then you should expect gold to keep on appreciating price. Now, in addition to this, now I want to share something with you on my screen. Look at my screen now. I'm sharing something with you on the screen. All right, so can you see my screen? Please, if you can see my screen, just type a yes. My network is, can see my screen, type a yes. Right, good. So you can see this heading. It says that gold rises on soft US data, Middle East war, and Fed rate cut bets. Now, one of the major factors that is contributing to increase in gold price down here is geopolitical tension in the Middle East. So besides the fact that the dollar is weakening, the major factor causing the increase is because we have this political tension in the Middle East, where Israel and Lebanon and Hezbollah are in a serious conflict. And then there is a tendency for that conflict to escalate and even expand to other regions within the Middle East. Anytime there is crisis in the Middle East, you expect the prices of gold to appreciate. Anytime there is crisis in the Middle East, expect the price of gold. And for now, we do not see any signs that this crisis will be ending anytime soon. There are no signs that this crisis will be ending anytime soon. Look at this. Look at the headline like this. It says, worries about a broader conflict in the Middle East also underpin gold. So there are worries that the conflict in the Middle East will escalate and could expand. If you come down here, it says, apart from this, the risk of a further escalation of geopolitical tension in the Middle East is also part of what is causing gold. So what am I saying in essence? Look for opportunities to buy rather than sell. It's very tempting to consider a sell on gold. Let's look at the analysis on gold. If you put the D1, now D1 is our daily time frame. You notice that the gold price has been in an upward trend. There was a mild pause in the movement some days back. That is the gold price. This is what is called the rally-based rally. It rallied all the way up, created a base, and then continue higher. So if you notice a decline in the price of gold, it's only temporary. Any decline you experience in the price of gold is not going to last. It's a temporary decline in the price. there's a tendency for gold price to continue higher. And from the look of things, where do you think the price might hit eventually before the end of this? Where do you think this price might hit? So we might likely get to 3,000, very possible. So we might hit $3,000, very, very possible. So we can see movement in the price of gold on the daily time frame. I mean, on D1, that's a monthly move on the high side. Then if I drop down to a higher time frame, we just retrace a little. We retrace a little. So rather than looking for a sell, I would want to see the market or see gold retrace to around this region. Let me shade this region, this color. So I want to see gold retrace all the way down to this region. Then I can go in for buy. So I'm expecting gold to fall back down here. If it falls back down here, then I'll go in for a buy. Somebody might say, why not sell all the way down here? Yes, you can actually sell all the way down here. But from my experience in trading gold, I would rather go with the current trend and go against the trend. Because many a times, gold might not get to the point we anticipate or it starts pushing higher. So for now, all the fundamentals are suggesting that gold prices will increase further. Now, but if you look at the charts on a technical basis, I even gave you a similar analysis last week that technically speaking, gold should decline. But fundamentally speaking, gold should appreciate. I mentioned this last week, Wednesday, when we were doing the analysis. On a technical basis, gold should decline. So some of the reasons for this decline that you're seeing today, for some traders and investors are already seeing it as an overbought. So your indicators like your RSI, your stochastic, and all the other indicators will be showing you that gold is at an overbought region. So whenever gold gets to this overbought region, traders normally close their position. So you see those who have been buying, taking profit, and then that taking of profit will cause a decline in the price of gold. That doesn't mean that the prices are actually declining. That's just a replacement and an opportunity for them to even go in with a much bigger lot size. So this decline that we're experiencing in gold may not last for too long. So don't be tempted to think of selling gold. Sometimes in the market, one of the qualities that you need to learn to have in the market is patience. Patience in the market is key, very important. Yeah, sometimes you'll be tempted to take a trade, tempted to even jump in on a move, but sometimes the best way to trade the market is just to be patient. That is just to wait. So with that being said, for those of us that want to wait, you can wait for the market to retrace down to around this region. So I have this red line on my chart. If I'm trading gold, I will be much more comfortable taking a buy from this red line when it falls down to this area with a stop loss just below this shaded part. So the shaded part I'm looking at is my is just the period where the market reached. So I will take a buy within that area when the market retraces down to around that side, so at the shaded portion. And then my stop loss will just be below. Then I'll target somewhere higher. Now, some persons might claim if we are sure market will fall down here, why don't we sell all the way down here? The answer is that we are not sure. We are not sure it will get down here because there are other areas within the charts where it can pause, which is somewhere around here. So you can notice within this region, we still have a rally-based rally. What that means is we have an impulse, a range, and then an impulse. So it's possible that gold can also retrace down to around this area before we continue higher. Remember that this retracement in gold, which I am mentioning, is also in line with the analysis we have done on the index. On the index, I said I am expecting a retracement to the upside, which is I'm expecting strength to come into the dollar. And if that is the case, then there's a tendency for gold to continue down a little bit before proceeding higher. So we expect gold prices to depreciate. So Mr. Chinedu asked a question that stage is on a sell, is on a losing sell trade on gold. Please, how do I close? Now to close partially, what you do is you click on close. Click on close. You know how to close your trade. Click on close. There's a section. I don't know if you are using a laptop. Don't use a laptop. Click on the trade. Press on the trade, press on the trade, and then you will see close order. Close. When you click on close or you tap on close, in the section where you see lot size, you will see your lot size up. In that section, reduce the lot size. If you enter the trade with 0.1, you can now reduce that lot size and close only maybe 0.5. So let's say you enter the trade on them with 0.1, then you want to close partially loss. When you click on close, it will take you to another page where it asks you to close with loss or close with profit. On that page where you are required to close, on your phone, not laptop, on your phone, where you are required to now confirm whether you really want to close the trade. At the upside of that interface, there's a section where you see your lot size. The lot size you have there, you can reduce it. So if, for instance, you have 0.01 and you are in a trade and you are in loss and you want to reduce the loss, then you can close partially. So instead of closing the entire trade, you can close, let's say you want to close half and you are in a trade of 0.1, you can close 0.05. So you go up there and then you type 0.05. Do it on your phone. On your phone, it is best. I doubt if you can do it on laptop. It's on your phone that you can close partially. I don't think partial closure is possible on the laptop. I've not tried it, but I think on your phone is the best way of doing it. All right, so for gold, we expect a mild retracement. So this is what I have on my chart for gold. I expect the price to decline a little to around this region before appreciating higher. So like I mentioned earlier, I do not expect so much from the market this because we do not have so much high impact news this week. Market is likely going to be dull. And that's why you notice that even my analysis is a bit dull because there's nothing much actually happening. So let's look at pound USD. So someone suggested the pound US dollar. So let's quickly look at pound and the dollar. So on pound USD, just like I mentioned, that I'm expecting a retracement on the dollar. So if we're expecting a retracement on the dollar, then definitely, all right. So Mr. Chinedu said it worked. Okay, right, that's good to know. So definitely, USD has been in an upward trend for a long time. Now, if you look at my charts, at this punch, this part that I marked as green. So this green shaded portion is a supply zone. It's a supply zone, what we refer to as support and resistance. So this is a resistance, it's on resistance. So we can see that pound US, with that being said, we might not expect a reversal, we shouldn't be expecting a reversal, but we can anticipate a retracement in the trend. So you can see how pound USD has been moving. There's an impulse, so look at my cursor, have an impulse move to the upside, a retracement, an impulse move up, a retracement, another move up, and then we expect a retracement. All right. So if you look at the pattern that is on the pattern we have on the pound USD, notice that we have, so let me clear my chart of these lines so that I can show you what I'm trying to explain. Remember that whenever you're doing technical analysis, your technical analysis is simply you as a trader in for patterns in the market that tends to repeat itself. Yes, so once you identify those patterns, then you trade based on that. So look at this. We have on the Euro US, on the pound USD, an impulse to the upside, and I just draw an impulse to the upside and a retracement. And then we have another push to the upside and a retracement. And then we have the last leg, which is this push to the upside. So what should we expect? What should be our expectation? A retracement. Remember that we have even pushed up to a strong region. That's that shaded portion you're seeing up there. So we pushed up to a region which we will term as a support, or some will call it supply, or some will call it the order block or whatever. So we have gotten all the way up there. So what we expect from this instrument is retracement. So I want to see the market retrace. And with that being said, now the retracement is not going to be long term, because take note, I said on the dollar, I'm expecting a retracement on the dollar, short-term retracement on the dollar, because the dollar has hit a level of strong demand. So because of that, we expect the dollar to appreciate. And if the dollar appreciates, then we should expect that currency pairs like US pound JPY, I mean pound USD, also show us some mild retracements. That is exactly what we are experiencing right now. What would I do from this point? If you look at this structure, look at the structure that I have just printed, there's something very peculiar about this pattern. Notice we have an impulse move to the upside. Look at this massive candle, this green candle. This is on the H4. We have this green candle to the upside. And then we have this candle that has formed above the high of this candle. But take note that this candle closed within the range of this green candle. So this bearish candle is closing within the range. Now, this in itself is a reversal pattern. So what you are experiencing up here is a reversal pattern. It closely. Look at it closely. Your head and shoulder. This here, swing high. So with this, I should expect a continuation to the downside. Now, if we had seen this trade much earlier, this is where I would have taken a sell on gold. I mean, on pound USD. I would have waited for this area to be filled up. So there's a gap between this low and this high, what people refer to as fair value gap. So I would have waited for the market to come back up here to take it. So if we have missed this, then if you are online and you are watching this and you are interested in taking trades, then you can take a sell on pound USD. So from where we are currently, I take a sell trade. There's no point. So we take a sell on pound USD. But how far should we expect the market to increase? So if I take a sell on pound USD, then I want to see the market retrace to around this area. So which means my take profit will be around here. Let me give this a green color so that you know where I'm referring to. So take a sell trade on pound USD. You can even do that right now. That much. I'll just go ahead, take a sell trade on pound USD, and then your take profit should be within this area. So look at the area I'm marking. So within the area of 1.355, 1.33500, and 1.33100. So within that space, so within this area, and take your profit. I'm expecting pound USD to depreciate down to this point. I do not expect it to fall below yesterday's low price. And what I mean by yesterday's low price is, remember this green portion you see here is 61.8 retracement on the Fibonacci. I'm expecting pound USD to trade down all the way down to this point. So if you want to take a quick scalp in the market, you can sell pound USD all the way to this shaded region. Shaded region, you check the price, look at the price. Any price within the shaded region is appropriate. Now, I would not expect it to fall below the low of yesterday. The low of yesterday is this point. Now, if it falls below this point, then it means that we will most likely continue lower, even continue lower up to this other region. If we fall below that blue line, look at that blue line on my chart. Look at that blue line on my chart. If we fall below that blue line, then just know that we are going to go all the way down to this shaded portion. Let me change this color to dark green. If we fall below this blue line on the chart, which means if we trade down, so this is what I'm saying. If we trade down here, point, then I expect a continuation higher. But if we trade and fall below this green line, look at this blue line, then note that we are going to continue lower. I don't know if what I have said is clear. So please, if you understand what I have just said, just type a yes. And if you're following the analysis, just type follow. If you are following my analysis, please just type follow. So if we fall down to this point, then I'm expecting a retracement. And if we break below this point and go below this shaded, this line, look at the line, the blue line on the charts, then know that we are going to fall down to this area. So one of the things you do is to, on your own charts, mark this point, which I have labeled on my chart, or you can just take a screenshot of what I have on the chart so that you can use that to monitor your trades. Yes, so use it to monitor your trades so that you know what to expect as the market evolves. All right, so thank you very much. So we have a couple of persons following up the analysis. That is it. So I'm expecting a continuation down all the way here. And if that happens, then you observe the behavior of the market within this area. If the behavior of the market in this area is favorable, what I mean is you start seeing signs that market will be higher, then you can close your trade. But if the market goes below this area and then falls below this low, this is Friday's low, just have it at the back of your mind that our next target will be this green shaded portion down here. And it's very possible we will get down here because, like I said, I'm expecting the dollar to retrace this week. So today is Wednesday, tomorrow, Thursday, Friday. There's a tendency for the dollar to retrace because of the new month. Remember that most times or sometimes when the market falls and falls and falls, towards the beginning of a new month, there's usually a retracement. Then if there's a continuation down, the continuation will occur sometimes in the middle of the new month, then we continue further down. Now, I'm expecting a retracement on the dollar. And with that retracement on the dollar, currency pairs like the pound USD and Euro USD should also experience movement to the downside. And also gold should go down. Take note that gold prices should correlate with the dollar, but they do not completely correlate with dollar. Negative. So sometimes gold is purely based on sentiment. So sometimes the dollar could be appreciating and gold is not falling. It happens. Price. If you see the dollar appreciate and gold is not falling, that's because there are other things playing out on gold that may not play out on currency pairs. So with that being said, I think the analysis on pound USD. So let me look for another instrument that was suggested in the chat. So someone is also suggesting USD CAD. So I can see USD CAD. All right, so the tool I'm using here is the Fibonacci. So I'm using Fibonacci. What tool are you using? Okay, yes, it's Fibonacci. So I'm using Fibonacci and not only looking for, so the areas I have labeled on my chart are Fibonacci 61.8 all the way down to 79. That's the area I have marked on the chart. So let's look at the USD CAD, which is one of the pairs that has been suggested. USD CAD. So permit me get USD CAD. So you notice that while the analysis is going on, I am not talking much about the fundamentals because there's nothing much for this week fundamentally speaking. But from next week, we should have a good move or good fundamentals to support the market. Usually, on a personal basis, or personally, whenever the market is like this, where we do not have much fundamentals, I tend not to trade much. So this week, in fact, for this week, I have only taken one trade, the whole of it. That might just be the trade I'll take for the rest of the week because there's nothing much fundamentally. All right, so this is USD CAD. You can see how USD CAD has been pushing down, which is normal, as I said earlier. We are also pushed down. Now, most times, one of the weakest currency on our list is CAD is the weakest currency on the list. But sometimes you see CAD appreciate. But there's a tendency that in the next meeting, the BOC might cut by 50 basis points. That is 50. So they've been cutting, and there's a tendency they will keep cutting. And the more they keep cutting, the more the prices or the price of CAD will depreciate. But CAD is a peculiar currency there because the peculiar currency because the prices of oil affect CAD. So even when the currency itself fundamentally should be weakening, cost of oil prices increasing, CAD will gain strength. Whenever there is increase in oil price, despite the negative fundamentals on the Canadian dollar, the CAD will begin to gain strength. So some of the moves that you are experiencing in the last month up to this month in Canadian dollar is basically because of the increase in the price of oil. So currently, we can see how we have fallen all the way down here. Now, I will not do it here, but anytime you're trading any currency that has CAD, you have to keep an eye on oil prices. Very important. So if you are trading any currency that has CAD, okay, pound CAD, AUD CAD, USD CAD, you are going to not only look at the fundamentals on CAD, but also the current oil prices. Oil is increasing in price. Expect that increase in price might reduce any negative fundamentals that might occur. Right now, CAD should fall massively. So CAD should be one of the currencies that is going to be trembling. But because of oil prices, the CAD is a bit stable, even though it is not completely strong, but it's a bit stable. So on USD CAD, what should I expect on USD CAD? On USD CAD, I would expect a further decline on this instrument for the short term, not long term. And let me show you something. I am on W1 on USD CAD. This W1 on USD CAD means I'm looking at the market at an interval of 1 year. So this is last year's movement on USD CAD. The line you see me mark on the chart is the price of USD CAD of last year. That is the all-time high, last year's high price. This is last year's high price on CAD. The blue line on my screen is the highest price recorded by the Canadian dollar last year. And this other line at the bottom side, which is, let me change, this other bottom line, is the lowest price recorded last year. Now, notice how the market got close to this all-time high, this high from last year and fell off. It has fallen off from that high. At this point, we can conclude that USD CAD on a larger time frame is ranging, currently ranging. So, but from where we are, the move to the downside seems to be much more prevalent. So there's a tendency for us to continue lower, all the way down to this green part. So this sharp the point I have labeled. The market moves from what is called external liquidity to internal liquidity. Now, on a higher time frame, this is the only internal that we are experiencing on the chart, that is on this particular time frame of W1, there's a high tendency for the Canadian dollar to run down to this region before we. If you now go down to the monthly, which is our T1, look at where we are. So we are very close to that region which I marked on the chart. What I'm saying in essence is, I am going to expect the dollar, the USD card to fall back to this region before we push back up. Somebody might wonder, if the dollar will appreciate, so why do we expect CAD to continue lower? That is because you need to now check oil prices. Oil prices are on the increase, then you know that CAD will most likely get down to this area. So for our analysis for this week, I will expect the Canadian dollar to continue lower. And so I will be looking for opportunities to sell on the Canadian dollar. Now, but where we are currently is the worst place to be selling Canadian dollar, where we are. So this place where we are is the worst place to sell the USD card. What I would rather wait for is a mild retracement. So I would want to see the market retrace all the way up to around this area. Look at this area on my chart now. So once we retrace all the way up to this point, then I can go in for. So I will be selling if the market can retrace, give me a mild retracement to this region. So that's what I'm saying. And get something like this on USD card, then I will sell from here all the way here. So this is short term. I'm expecting a mild retracement up to this point before I sell. But where we are currently, place where you do not want to sell USD card. Don't even think of selling from where we are. Now, for those that might be aggressive, you can take a buy from here all the way up here. But in a trend like this, I would not recommend a buy. I would rather go for a sell rather than buy. All right. So I think that is it for USD card. So we've done justice to these currency pairs. So with that being said, please, if you have any question, feel free to drop your questions. Let me take your questions before call it a day. I already passed 9. So please drop your questions. Let me go through your. All right. So another currency pair I'm seeing as a PAN card. So let me quickly look at PAN card. And then for those of us that have questions, please drop your question there. All right. So PAN card is what we are currently looking at. So PAN card. Now, the pound turns out to be one of the strongest currencies so far. And the reason for that is their interest rate has been kept unchanged. And in addition to interest rates being kept unchanged, there are so many other fundamentals that have been in favor of the British pound. But earlier this week, we began to see some negative news on the British pound. So most of the news that came out this week on the British pound turned out to be negative. And so with that, there's a tendency that let's see if I can get some of the news that came out this week on the British pound. Let me not waste time on that. So there's a tendency that we might see a decline in pound, but that will just be short term. So on pound card, we are moving lower. So I'm expecting a continuation down all the way to this region. So there's this point on the chart labeled as this blue point. So that's how far or how low I'm expecting this guy to get to. In fact, I'm expecting it to get all the way down here from what I'm seeing, and I want to see it fall below this. So what that means is pound card is likely to take out last week's low price. So there's a high tendency that pound card might depreciate below last week's low price. This blue line you see here, the lowest price from last week. If you see the way we left this high, there's a tendency for us to continue down to the low. But where I'm expecting it to actually get to, which I know for a certain, which there is this shaded portion. So if we get to this shaded portion, so on PAN card, can take a sell all the way down to this area. And once you get here, observe the market. If the market breaks below this low, yeah, if the market breaks below this low, they know we are going to run last week's low. If the market breaks below this intermediate low here, this swing low, this point here, this point I'm mentioning it, this small point, at this small point. If the market breaks below this low, they know we are going to run below last week's low. Else for now, I'm expecting Pancard to run down to this particular region. So someone is asking the question that what makes CAD relate with oil? Now, this question is asked by Benjamin. And the reason why CAD correlates with oil is because the largest export from Canada is oil. So the oil prices are the major exports from Canada. And that is why anytime there's increase in oil prices, means that there will be demand for Canadian dollar. Let me show you something on my charts. I don't know if you can, I want to see something, I want to show you something on my screen now. Just give me a few minutes to bring up this market. Okay. I would have loved to show you something now, but take me some time to put it up. Oh, but Mr. Benjamin, note, have it at the back of your mind that the largest export from Canada is oil. And so because of that, not just oil and their, what did you call it? Oil and their derivatives, all of that. Okay. So the chart, so it has come up. So let me show you something on my charts. Charts, stop. Look at this. Look at what I'm about to show you now. So please, if you can see my charts, just indicate if you can see my chart. You can see, sorry, I don't mean chat. If you can see my screen, you can see what I'm showing you on my screen, please. It by typing a yes. Yes. It by typing a yes. Fine, good. So you can see that, fine, good. So you can see that the largest export from Canada is mineral oils, distilled product, and so on and so forth. So the 25% of export from Canada is oil derivatives, that is crude oil and all the products from crude oil, the largest export. Any of these things, if crude oil increases in price, there's a high tendency for Canadian dollar to increase in price. But take note that increase in the price of Canadian dollar does not affect increase in the price of oil. So if, say, for instance, there's a fundamental that occurs and then the Canadian dollar suddenly increases in price, increase in price will not translate to increase in the price of oil. I don't know if you're getting the point. Increase in price of the Canadian dollar will not translate to increase in the price of oil. But increase in the price of oil will mean increase in the Canadian dollar. Because the major export of Canada, as you can see on my screen, is crude oil, Brent, and all its derivatives, all its other products that is gotten from crude oil. So anytime the value or the price of crude is high in the market, then Canadian dollar will appreciate in price. And that is exactly why we are currently seeing the CAD appreciate in price. Although fundamentally speaking, the Canadian dollar is one of the weakest currencies fundamentally. But based on relation with oil, appreciating it. All right. So I want to believe that comment, my answer to your question is very clear. Okay. All right. Then someone is saying that pound USD is buying. You say pound USD is buying. Pound USD is not buying. Let's quickly look at the chart. Let's look at the chart again, and then you tell me if this is a sign that pound USD is buying. So this is pound USD, guys. This is pound USD. Is pound USD buying? After the analysis I gave you, is this a buy? It's not buying. It's just a small retracement. Is it not? It's not okay. So okay, what can you say now? Is it still buying? Those who took trade on pound USD, please, if you're in profit, if you're in any profit, let me know. If you're in profit, you let me know. Took the sell on pound USD and you're in profit, then you should just let me know. So, who is this? Mr. Olatunde, pound USD is not buying. Look at pound USD on my cards. It was just a small retracement. I asked you to sell and look at the current candle that is forming pound USD. So that's not a buy sign. Not a sign that it's buying. So the last question I have here is, whenever the extension in Middle East war go to buy, any reason for that, sir? Okay, so thank you. Chris is saying is in profit, $16 on pound USD. Thank you very much. If there's any other person who took the trade on pound USD, please let me know. All right, so yes, so profit on sell pound USD. Thank you very much. That's good. All right, yes, whenever there's crisis in the Middle East, the prices of gold will appreciate. The reason is because, for instance, the current crisis in the Middle East is happening because of the war between Israel and Pakistan. Now, Israel and Pakistan, all right, so Mr. Emmanuel, you're in profit, that's good. So Israel and Pakistan, now, who do you think is one of the sponsors of Israel? Which country do you think sponsors Israel? If there's a war within the Middle East and Israel is involved, which other country of the world do you think will most likely sponsor Israel? You know the answer to that question, just type it on the comment. Thank you, sir. Mr. Felix, Mr. Christy. Christy, is this a female name or a male name? Yes, the US. So the United States are the ones that will sponsor, okay, female, all right, thank you. So the United States are the ones that will sponsor Israel. In fact, ongoing war, they are the ones sponsoring Israel. Now, they have even raised alarm that they do not wish Israel to escalate the war, that is, to expand the war to other places. It was Israel and Pakistan. And then Israel extended it to Hezbollah, which is a militant group that is almost all over, major part of Asia. And now the war has extended to Lebanon. And from Lebanon, it's spreading. So, and the US have said, we are worried about the way you are escalating this. We don't want this to go. Because they are sending ammunition and aid. So, now, when who is suffering it? The US. Is going to affect their economy. And so because of that, gold prices will appreciate. It affect the US dollar. Anytime there's war in those areas, just look at it very closely. If there's any crisis in the Middle East, and Israel is not directly involved, Israel will be indirectly involved. Israel will support one of those countries, even if they are not the ones directly fighting. If Israel is involved, then the US will be involved. So because of this alone, it tends to affect the gold prices. That is on one side. There are other reasons, but that is just one of the reasons which I can easily explain so that you get the point. Anytime any of these crises takes place in this region, it affects the dollar. Not really that it affects the dollar, it affects the sentiment of traders on the dollar. So it's not really that the dollar will depreciate based on that, but there is this sentiment that the US is already involved in the war. And so traders will prefer to buy gold and keep their money in gold and dollars. So that is just, the market is a crazy place. All right. So thank you, ladies and gentlemen. We believe that you had value from our discussion. Those of us that took trade on any of the instruments I gave, you should see some, reasonable profits right now. So someone is asking for my name. My name is Don Deyo. Thank you very much, and hopefully I'll see you again next week, Wednesday.